We are back for another week here at Money Never Sleeps. It's going to be an interesting one. We got debt ceiling discussions. We got some new data coming out. Seems like every Fed president is speaking. So a lot happening this week. We'll see how much of it moves the market as we get into all of that and more. Hit that like button. Subscribe to our channel if you have not. We greatly appreciate that. Nothing Kevin or I say is financial advice. We're not financial advisors. We're a couple of guys who love following the markets, nerding out on this stuff. So please do your own research before making any buys or sells. Kevin, I know you're a little under the weather this week, but you're here. You're pushing through. We appreciate that. How are you feeling as we begin another week in the markets?
Yeah, a little bit sick, but money never sleeps. So obviously the charts are always going to be on my mind. Feeling pretty good about this week. I think we're seeing some interesting stuff going on with crypto. We're also getting pretty close to the debt ceiling, and there's been kind of quiet for the most part. And again, when I mean quiet, I mean the markets have been pretty quiet reacting to it. So it'll be interesting to see how this week going into next week plays out. But yeah, otherwise, traditional finance today, extremely boring. Crypto over the weekend, so a little bit of a pump. We're seeing it today. How long will that last? Who knows? It's a matter of time in these markets, and you can't always tell what's going to happen next. But definitely going to be exciting when the next move does happen, in my opinion. It's good, Ace.
Good to see you, Ace. Welcome. Yeah, let's start with the debt ceiling because that is the big news right now. I feel like there's not a ton of like super important data coming in this week. We'll talk about some that happened this morning and through the rest of the week, but the debt ceiling is top of mind for a lot of people. Tomorrow, Biden and McCarthy are going to meet with other congressional leaders. They're going to talk. This may be like the last time they can all get in a room together. Like we've seen this, we've seen the calendars, the schedules for all these people, and this Biden's getting ready to head off to Japan after this. So progress needs to be made. They've been saying that the Biden administration will not budge on student debt relief plan as well as the Inflation Reduction Act. They are not going to budge on those two things as negotiation points. Is that posturing? Probably. But at the same time, if they really are that firm about it and the Republicans are, that's like something that they need to see movement in order to pass this, then it could come down to the wire. And everyone's assuming that that an agreement is going to be made. And I think that is kind of priced into the markets right now. What isn't priced in is if there's no progress made tomorrow, we could see a lot of volatility. And I'm not sure what time they're meeting. The last time that they met, it was right around like when the markets were closing. So we didn't get any information until after it closed. So we could see a lot of volatility tomorrow in the after hours in crypto if there is not a lot of progress made. So I think it's a good time to, I think that eventually something will happen. But if there is volatility tomorrow, it's not a bad time to buy some dips, in my opinion. I'm not talking about French onion either.
And I prefer like salsa or queso blanco, but yeah, right now it's really weird when I see how people are kind of pricing this debt ceiling. Everything's gonna be okay. Again, it seems like we're in this, and I guess this is very reminiscent of other financial failures in the past, but it's like everyone kind of expects everything's gonna be okay. We don't know that for sure. And even if say everything does get resolved, right? Say everything is fine. Everyone thinks that the market might go up at that point, but that might absolutely just be the time where institutional money just pulls the rug on a lot of people, right? It's very possible that happens. We're kind of at this point where the market kind of can predetermine, preemptively make moves before the actual, events come out. We've seen it tons with CPI, tons of these employment data, inflation data. The market's kind of like always ahead of what the market's actually going to do. People are just always pricing things in. Maybe they get it wrong this time. It's very possible that happens. That the market can't always be right. Investors can't always be right, and there's a good chance that dumb money is wrong this time. And I wouldn't be surprised if that's the case. But also, I think that it might be possible that we see a dump in the next 2 weeks into maybe this, event, and then everything's okay and we start to pump. So there's one or two scenarios that could potentially happen where, the market's going to move one way or another. But if I were to say which one was going to happen, I think it's more likely that everything does get resolved and then, the market dumps anyways right after. We're going into the summer months. It's low volume, right? I think a lot of people are just kind of like out of sight, out of mind. We're not going to worry about, the market for right now. Complacency, terrible place to be. I mean, assuming that the debt ceiling does get solved and we're complacent, oh, how can my money ever be in any danger? But then that's a perfect place for institutional people to absolutely just take the last Jenga piece out before the absolute collapse. That's just one scenario. That's one thing that I'm looking at, and we'll go into it in a little bit, but I think the United States is at a point where it's just absolutely lying through its fucking teeth right now on every single issue in this country. And if we remember The Big Short, no one ever in the history of ever gotten away with fraud or lying. It always comes out. Truth always comes to light at some point. So if we could be lying about everything right now to this point where, the economy's growing, 3.4% unemployment is great. We're not going to see a recession. That could be a fudge number. I think it is. But really sorry. I went off on a rant there, but definitely a weird place right now. And I think that the markets might be wrong pricing this in preemptively. I think that we're going to definitely see more volatility post, June 1st.
Okay. Do you still got me? Because my Wi-Fi is not great right now, apparently.
I got you right now. I can hear you.
Okay. It's a resolution. All this feels like it is priced in. I mean, if we look at the markets today, everything is just kind of flat. We see the NASDAQ up a little bit, the SPY up a little bit, but it's still right around this like 4,100 number that's been trading at forever. I don't know if you still got me or not, but you're frozen on my end. This is just really...
You're frozen on my end.
Comcast, man. Jesus.
Short it. Let's fucking short it. What's the ticker?
Awesome.
I'm just kidding. All right.
Yeah. Let me look that up real quick.
Yeah.
But yeah, there's a lot that I'm not loving what I see right now. We had data come out this morning, some manufacturing data from New York State Fed. It dropped to a number. So I don't know a ton about this one. I kind of looked into it a little bit before the show, but this is manufacturing data. It's highly volatile. At the same time, it came in well below expectations at a number of negative 31.8, dropped 42 points. Expectation was -5, and a number below 0 is showing that there's likely contraction going on in demand, right?
Yeah.
And so supply is going to have to go down. I think there is a lot on the manufacturing side, and we'll see more of this throughout the week. So Tuesday, we have retail sales data and industrial production data. We also have 7 different Fed presidents speaking throughout the day. So we'll get a better idea of where a lot of them stand. We've seen some Fed presidents already talking this morning, and it's kind of moving the markets a little bit. 2 of them said that they want to pause in June. Another one said that they're open to more rate hikes. I think this shows that there is not a clear, the Fed doesn't have a clear plan right now. I think they're still data dependent, which they have said for a long time, but that's happening Tuesday. Wednesday, we get more housing data around new home starts. Thursday, we get more jobs data and existing home sales. So a lot to parse through over the coming days. Once again, ton of the Fed presidents are speaking. I think that they're just going to continue to kind of say what we expect them to say, right? Like we expect them to say that it's going to be data dependent, and I think that that's what is going to happen. So I don't know how much we're really going to get from them beyond the debt ceiling talks. I don't know what is going to really move the markets. It's still just so dependent on inflation. Like individual stocks are moving based off of their reports, but nothing's really moving any given sector or index. So it's still just kind of like we're waiting to see what happens next. The Fed rate hike probability has moved sharply, however, based off of those Fed presidents speaking. We're now seeing a 25% chance of 25 basis point hike and 75% chance of no hike. I called this, was it last week or 2 weeks ago?
Yeah,
when they were showing, when they were saying that, a few weeks ago, it was most likely going to be no rate hike or they're going to cut 25 points. And I was like, I don't believe that for one goddamn second. And now we're seeing that they've taken off the table for a cut, and we're seeing that number for rate hike start to creep back up. So I think all of the geniuses out there who want to try to be a few steps ahead, I think there are times to be a few steps ahead, and there are times to take the Fed at their word. And this is the time to take them at their word.
I will say this too about taking people at their word. The Fed, I think, definitely have told you they're data dependent. They're gonna, react based on how the data comes back, right? And again, we're also reacting to lagging data. So a lot of this information that the Fed is getting and that they're reacting to, that's not the data that is the time of when they make the decision. It's from months prior. But again, taking people at their word. Let's talk about Wall Street and the stock market. Tons of people have been saying that we're going into a recession, possibly in Q3 and Q4. I would like to remind everybody that next month is the last month of Q2, right? June is the last month. We're going into Q3 and Q4 pretty soon. So again, the fact that a lot of these people have been saying this since the beginning of the year, since February, March, and we've seen the banks, having the crisis. I think it might be a good idea to, realistically think that there's a what am I even saying? There's a good chance that we're probably going to end up seeing some form of contraction in in the markets. We're going to get GDP for Q2 so at some point, later in the
next
summer.
Next week we get the first revision for Q1 GDP.
Oh, wonderful.
And it wouldn't shock me if that gets revised down. And it wouldn't shock me if we come to find out later this year that, hey, we went into a recession in Q2, right? Like,
it's very
if
possible.
We're seeing contraction in demand, if we're not seeing as much spending, if we see these numbers being revised down, and we'll get the final Q1 GDP number in June.
Mm-hmm.
Who's not to say that we won't be in a recession like by the time June is over? Like that's very, very possible. And if we start to see, unemployment go up with that, look out, it's going to get ugly.
Yeah, and again, I think that all the BS that we are being told and fed at this point, and how much the markets are just not reacting to anything, in some ways, just gives me, a really bad taste in my mouth and in my stomach. I kind of feel like this might be a worse drop than in 2008. It's very possible, in my opinion. I know I'm the ultra bear. I absolutely think the world is going to be. If I could short the planet Earth, I probably would right now. But just find me a way. But I don't think that this is going to be absolutely a good recession that we're going into. I think it's a point where a lot of people are going to be unexpecting this because they've been lied to this entire time. And then when it does hit, they're just not going to be prepared at all. And that's from the top down. But I'm taking what a lot of people are saying, a lot of these, high ranking people in these companies and these banks saying that we're going into a recession in Q3, Q4. I'm pretty positive that something like this is going to happen. And I'm okay with listening to them on this, not usually the other stuff when they're saying that, oh no, inflation's going down, don't worry about it. But it just seems like we're getting so close, and we've been waiting so long for this. This has been over a year in the making. I know for me, I've been a bear since April of last year, and now it's like, we're starting to make some progress, and we're getting closer to the point where people are starting to, acknowledge finally that we possibly could be going into a recession. We could be in one right now, but there's not a lot of time left. That's what I'm trying to get to the point. This can get ugly very fast. And if we pull up, I'll pull up the Dow in a little bit about, how fast the market moved from 2008 when, it finally did turn. It was nasty for months. It was just super quick, and people had no time to recover or get out.
Yeah. You know what? Let's just do it now. Pull up the chart.
All right.
Let's dive into that.
Let's do it. Yeah. So, I was just marking up the chart a little bit. Hopefully you guys can see this. Yeah, so I'm going to make this first one, which is May of 2008. Let's make that green, and then just pull it up a little bit, and let's make June of 2008. We'll make that white, and then this is September, so we can do this right here, and we'll make that blue. I don't know why those colors, but I like them. And if we look here, this is on the monthly chart, so we can see that on the monthly we kind of rallied from March all the way into May. We wicked up here before we started seeing some rejection on the monthly, and then June was an absolute red missile down. Right, we found some support around this level, about 11 back when the Dow was 11,325, and then we kind of rallied a little bit. We found some type of relief rally in July, August, which is now the start of Q3, and then the last month of Q3 we started seeing that absolute drop. And this drop was the one that I always reference. It's the one where George Bush came out on TV and said, yeah, everyone's afraid right now. We've seen triple digit drops in the S&P and stuff like that, which was huge at the time, and definitely is a nasty candle down. But let's look at October of that year. Massive, right? We wicked all the way down here and we bounced back up. But then again, over the next few months, it was just still red. And we hadn't put the low actually in until March of 2009. So from, let's say, May 2008 to March 2009, that was just, let's get the
bloodbath.
Absolute bloodbath. And I mean, I'm not saying that was fast, but if you look at some of those months, like that was extremely volatile. That's 47% from May to March of that, like, what is that, 9 months or something like that, 10 months. and that's absolutely brutal. But this is I mean, if you let's see the weekly might be even nastier. Oh no, I gotta go back in time. Damn. All right, yeah.
Oh.
Here we go. So yeah, so we got a little bit of a relief rally back into May, and then we started seeing absolute downturn. It's consolidated sideways for 8 weeks or so. Before the next thing you know, September, whoosh, right down, consolidate again,
poof,
another drop.
It's gone.
I mean, this is really fast. Like, people were panicking. That 1 week in September, the late September, I think it was the week of like the 22nd or 23rd or something like that, was just an absolute bloodbath on Wall Street. People were freaking out like crazy, and
you're talking about September 08?
Yeah, 2008.
That was like right. I still remember it very well because that was the first or second week of classes my senior year. When I was studying financial planning, and it was like all the professors. You came into class, and all the professors' eyes were just bloodshot, like eyes wide, pale, just like, what is happening? Am I going to have a job anymore? What is going? Like, it was absolutely horrendous. And I'm just sitting there, because at the time I was playing poker for a living. I'm like, I'm just going to keep buying shit. Like, if people are it's going to come back. If people are going to be panicking, like, and I bought a lot of stuff back in those days, and I just had to hold it for a decade before it started to go up again, but it came back.
Oh yeah, I mean, even look at this little relief here. I mean, frick, this is from March 2009 to, let's say, April or March 2010, like right around here. That's a 73% push to the upside. So that's a pretty good return if you're buying at the bottom around there. Again, when there's tons of fear in the markets, it's always a good time to get greedy. It seems to be, as history is repeated, people, when they're absolutely afraid to buy anything, that's usually when, institutions are buying, when big money's coming into the market. Always keep an eye on the volumes. That's going to give you a good indicator too, to see if there's actual strength behind the move. A lot of what we're seeing right now is just absolutely no volume at all. And that's why I still believe that we have so much more to the downside, because if we're pushing stuff up artificially, or we're consolidating and we're in a bearish trend to the downside, we're still in a bear market, most likely it's going to drop. And you might see some of those volumes pick up, but they're going to be red candles because everyone's just panic selling near the end. So it'll be really interesting. But again, that timeline horizon kind of scares me because we're kind of living in it right now. So if we do see, a massive drop in June, I mean, are we creating the same fractal? Maybe. I don't know. Obviously, things are different now, but maybe we're creating something even bigger. I just don't have any confidence right now in the United States or the Congress or anything in the financial markets globally at this point, where it's not going to affect every single person who is holding onto assets, every single person who's working. And this is all interconnected. And when this does drop, we also see tons of the after effects come in the following months. So we could see the market bottom in 2000. This was March of 2009, I think. Yeah, March of 2009. I mean, we didn't stop seeing layoffs all the way until like 2011. So, I mean, this is a long time horizon. This is why we've been expecting this for a while too. We play the macro game because we know that it's a lot easier to tell where the market's going to go. But if this is the case, I don't know. It's pretty scary scenario, in my opinion. It's just one that I've been watching pretty closely recently.
Yeah, absolutely. Any other charts you wanted to look at today?
Yeah, let's I know we talked a lot about TradFi, but let's pull Bitcoin dominance, because a lot of people are, again, still bullish on Bitcoin. I am not by any means. And I want to show something. I was giving up on Bitcoin dominance. I was, but something does scare me a little bit about this. Like, obviously the volumes are coming down. That just means that there's less transactions of people buying Bitcoin. And if it is pushing up based off low volume, that just means that the price of Bitcoin is going down and the dominance is still going up, in conjunction probably with the DXY or something like that. But if we look at the daily, we are finding support on this 50 moving average right here, right? We haven't dipped below this level here, and there is a massive gap. I do not negate that, and we tend to fill gaps, but we're finding support here. We're, undervalued, going towards, the overbought territory. We have to break this resistance at 48.48, which is right here. I wouldn't be surprised if Bitcoin, whether the price goes up a little bit more or if it dumps. I'm more leaning towards the dump, but alts dumping harder than Bitcoin, meaning the Bitcoin dominance is going to go up, and it's probably going to rise a little bit more. This might be the final leg of Bitcoin dominance. And once it gets above here, obviously I don't think it's going to be able to reach 51.37 at this point. I think that Bitcoin's due for a pretty good correction very soon. I do think that we're going to start to see this tail off, but with this going up, I think this means that alts and Bitcoin itself are probably going to put in some corrective structure, where we're going to see some negative price action for most crypto assets. So Bitcoin dominance right now, just be careful, watch it. This is something that, out of nowhere, you're going to start seeing some massive green candles like we saw over here in April. If we break 48%, we're already at 48.03%. It's a pretty big move since we were where we were, just yesterday. I believe we were at 47.75 or something like that. So we've definitely seen some gains on this. And if we look over to Bitcoin right now, obviously my crazy charts are going on, but just look at this volume. This is the daily volume. You can kind of see it down here. We had a lot of volume over here, and we got nothing right here. So I'm not really convinced that we're going to be seeing some positive price action. I think that Bitcoin dominance is going to be climbing off negative Bitcoin price action, which, you brought up in an episode, I think, a few weeks back. It's like, it's a very real possibility that as Bitcoin dumps, everything else dumps harder, but Bitcoin's market cap is just greater. So the strength of it against other assets just remains higher. And then when Bitcoin dumps, those dump also even harder than it normally would. So seeing this right now and what we're kind of putting in, again, this is I'm looking at this yellow one right here is a massive macro, 5-wave move to the downside, which I think we have to find some type of support somewhere in between this range. I don't really necessarily know where that might be right now. It could be in this red triangle. I think anywhere between 23K and 25K seems to be the next move for Bitcoin, the bottom at least of this move. And the worst case scenario, say we did default or something like that, 20K is obviously would have to be holding a support. Otherwise, you're just going into a death spiral. But I think 23 to 25K is a really good, conservative range. I kind of even moved my target down to 23K just because I think that we could be putting in maybe even an overextension in this move to the downside. But I want to look at this where we are right now. We're currently in a wave 2, in my opinion, and I'm waiting for a 5-wave move to the downside. We've completed wave 1, in my opinion. I think wave 2 we're getting close to, even though that the daily is undervalued, oversold, and we do have some room to the upside. This 50 moving average seems to be a pretty good rejection level. And I tweeted out last night that keep an eye on the 50 moving average. And we were very close. We didn't hit it, but we were very close to hitting it. The 50 moving average right now is at 27,728, and we wicked up today to 27,663. So pretty close. Maybe there is a little bit of room to the upside. Maybe we get that today or tomorrow. But eventually, I think this is where this wave B is going to end, which is the corrective wave of the initial wave down. And then we're going to see wave C, which always is the biggest wave. And when we look at these things, and that could absolutely take us from where we are at, say it hits to the 50 moving average at 27,740, that could potentially take us down to 24,781, which is a 200, but I think it'll go a little bit lower than that. We could be somewhere in the 24,000, 23,000 range, and then obviously we find some type of correction, some relief before we make our final wave to the downside, which would be the wave 5. Maybe this correction, this relief rally goes up to the 200 EMA. The 200 EMA kind of finally matches up with it, and then we get one more wave to the downside. And then maybe do get a bit of a relief. Again, the hard thing with this is that there's structures within structures, and that's hard to explain because you have to go down to even the 1 minute timeline to see how they build up on top of each other. But what I'm telling you is
it really is like Always Sunny when you're giving me these wave theories of like Pepe Sylvia.
It's dangerous because, obviously Elliott wave theory, there's different types of waves and stuff like that. This just seems very clean to me that it's a 5-wave move to the downside on the macro, which is good because, we can kind of tell where there's going to be a relief rally, where there's a bounce, and we could use other indicators in conjunction with it. But right now, the dangerous thing is looking at this daily stochastic RSI. It does look like it's oversold, so there should be some room to the upside. But if we start to see this push up really quick without, daily closes pushing up above that 50 moving average, that means that we're kind of limited in our growth to the upside. I think that we are going to be coming down, and again, low volume. And I haven't checked Bitcoin on the weekly, actually. Let's take a look at that. Yeah, we came down a little bit. We're due to come down, right? Obviously, we're looking at this. We're finally out of the overbought, and we're coming down towards oversold. But that also lines up in conjunction with this larger wave where we're coming to the downside here. 50 and the 200 are right there as well. We have low volume, not necessarily the greatest case for strength. So obviously, I think we did put an impulsive move to the downside. We're not done with it. And then once we do bottom out, I think we will get a really good relief rally. But for the time being, I think this structure has to play out. And, it's probably unpopular, but I think 23 to 25K is where Bitcoin needs to go. I haven't closed any of my shorts. I've actually been adding to them at this point too, just because I truly believe this is the case for it. Could I be wrong? Sure. But again, with Bitcoin dominance also climbing at the time being, and the dollar, which we haven't really looked at the dollar. The dollar's making a little bit of a corrective move to the daily today. We said that it was kind of getting close to overbought, but the good thing is we are above this support right here. Maybe we found some support on this 50 moving average as well. So maybe we just consolidate above, the 102.035, and then we start to move to the upside, which we also in conjunction with Bitcoin dominance and Bitcoin, losing value. This could be just setting up a perfect storm for, finalizing this structure and getting to a point where, all right, Bitcoin can now do a little bit of a rally before, it continues with this, bearish structure, which I think it's putting in. But everyone, don't worry. The market, I don't think is going to collapse, instantly. I think that these structures are going to play out, and I think it is going to play out until later this year. And again, that's using the macro, what everyone's saying about recession Q3, Q4, also with Elliott wave theory, and then just some of these other technical indicators. I think that's the outlook for Bitcoin. And obviously, if you're worried about assets like, altcoins and stuff like that, you got to be following Bitcoin at this point, because they're going to follow that, and just anticipate whatever happens to Bitcoin. Alts get it about 30 times, 40 times, 50 times, 60 times worse.
While you're there, will you pull up the fucking VIX?
Yeah, absolutely. I love the VIX.
This goddamn thing is pissing me off. Like, the VIX, it saw a pop back in March when there was the banking fears. And it's even with all this debt ceiling stuff, the VIX is just chilling in this like 16 to 18 range. And it just doesn't make a whole, with how little there is going on right now, that part of it makes sense. But I have to imagine if we don't get like positive news on the debt ceiling tomorrow, that number has to take a move up in a big way.
Guess what?
It just has to. What's that?
The VIX put in a death cross. The VIX, it's over for the VIX. Just because I just noticed that. Let's go back and see where else the VIX has put in a death cross. Put in a death cross here back in September of 2021. Looked like it, a few months it was kind of like shitty. Next thing you know, it popped up all the way to 35, right? Then it came back down, got a golden cross, shot up again to 37. Let's go back further. Let's try 2008, because obviously that just seems to be my favorite year whenever I reference anything in the charts. But let's go back to 2008, because I'm sure there's probably a death cross somewhere around there. And then next thing you know, it absolutely popped. Oh, maybe I'm wrong. No, they got a golden cross. Golden cross. And then,
Look at that. How high did that go?
Pretty fucking high. Let's see. This was the height, 89.53. And let's see the low of that, where it was in that year range. Let's say right here is the low, right? We're not going to count 2007 because it's obviously a consolidation period. Let's say right here, the low was at 1980, which we're currently 1724 right now. So we're in a range of where it once was before it shot all the way up to 89. So
we're in a it looks like the VIX is in a consolidation period, like the VIX was, or right now, like it was back in like 07.
We could
really got weird.
Let's say, man, I could even be an asshole.
If you look at that, hold on. If you look back at 2007, we're in that similar range right now, both from a number standpoint and from the pattern standpoint. Now that doesn't obviously, that's not a cause and effect kind of thing, but if you believe that history leaves clues, maybe this is a clue that we're getting set up. We also have, it may not be the residential real estate market, but the commercial real estate market this time. That is what sends us way, way out over our skis. We have, I think I saw the latest, like 700 banks have self-reported that they have like what? They're 50% down from, from a profit standpoint. I'm blanking. I need to pull that. Let me pull this up real quick. Hold on.
Yeah.
I want to make sure I get this right.
Yeah.
Then I look at this VIX, I'm going to pull this up.
For sure. When I look at the VIX, I think of it as a slingshot. Obviously, it's like, oh, nothing bad could happen. It's so low. And the next thing you know, like even look at here. This is COVID, right? February of 2020, it was around, what was that? The close was at 1368. Literally the next week, it was all the way up to 49.48. At the height, it was at 57.40. No, 85.47. That was at COVID, and that was the 3 weeks, past the absolute global lockdown. But yeah, like this thing could move fast, and it seems like we're out of this range right now. I think this is a fake out here. I think we're losing this, and I think if we look on the weekly, we have tons of room to the upside. I know we kind of put in that death cross there, but that could be an absolute fake out. Look at this one. This was a death cross here, and then it just came right back out of it. And this was, November of 2021. So there's going to be volatility. I think that we're going to see something similar that's here to there. But when we do break it, we're going to get back into this, this wedge pattern, and eventually we're just going to break out of it because we're getting so close towards the end of it. And when it does break, honestly, it's like 60 is very conservative. I think that's what you and me both agree is very likely or possible if we're talking that. If it's really bad, if it's worse than 2008, I wouldn't be surprised if we get somewhere in the 80s.
Yeah, I mean, who knows? I don't think it's going to be worse than 2008. I just know that we're going to see another spike up in volatility before we exit this bear market. And at that point, I would like to be in a position to start buying stuff. So if we can just wait a few more days until my cash appears, that'd be fantastic.
How's that going? Did Jamie Dimon say you could have it back yet?
No, I'm still sitting here twiddling my thumbs, waiting, the 8 days that I have to be sitting here on my hands, just looking at it as the pending balance in my account. Between this and Gemini, I can't handle these like pending balance shit. But
what the hell happened with DCG?
I think that's a good place for us to wrap it up today.
We'll get into it tomorrow.
Either.
Oh wow, that's scary. I didn't know that.
Huh?
I thought like maybe I thought I was like living under a rock and didn't know like if they had announced anything from DCG. I haven't heard anything at all, but they were supposed to make that payment like by May 11th.
Yeah, and then there's I think May 22nd is the date that you have to file your proof of claims with Gemini, and then hopefully they start. I mean, who knows when or if people will start to get their money back from them, but like BlockFi's got stuff going on with their bankruptcy proceedings. If I get my credit card rewards back from them, that sure would be neat.
Yeah, I
had a BlockFi credit card, and that was it. I didn't. Yeah, no, it's not. I did not have any crypto on there outside of the Bitcoin rewards I was getting back. Which, hey, right now it's like $500. I'll take that.
Yeah, fuck it. Why not?
Yeah. All right. I think that's going to be where we wrap it up for today. We'll be back tomorrow, same time, same place, looking through everything happening in the markets. We'll see if we get any update on the debt ceiling. I hope that this shit gets figured out so we can move on to something else. And then we'll have some of that retail sales data that we can kind of look at as well. In addition to the Fed presidents who are speaking, that will move some markets. We already saw it today. Like I said, those probabilities are moving quickly, and I think they will continue to do so throughout the week. So thank you, everybody, for watching. If you have not yet, hit that like button, drop a comment, subscribe to our channel. Appreciate all of that. Thank you for watching. We will see you next time.
Take care, everyone.